that are this volatile and this uncertain, and where interest rates are going up and people aren't paying the same price for earnings, future earnings that they would have even 3 months ago or even 2 months ago, it's a good time to look at value, and defense certainly fits that category. I mean, you've got these stocks barely in double-digit PE multiples, and the world's not becoming any safer anytime soon, and the defense budget is growing yet again this year. So they sure seem a safer and more less bumpy ride than an awful lot of these tech stocks, especially the ones that don't have any earnings, that have been plummeting like a rock you threw out of a plane. No pun intended. So I do think it's a good time to look at these.
And as we have names like Lockheed Martin and Boeing reporting, and we had a guest on recently who's a frequent guest on our show, Sarge, Stephen Guilfoyle, and he picked Lockheed Martin. He also had Planet Labs, which is a satellite imagery company. Matson, he mentioned, which is ocean transport. And all of these types of names in this aerospace and defense sector, particularly names like Boeing, Lockheed Martin, Northrop Grumman, General Dynamics. How do you go about picking in the group? Do you like an ETF, a general overall on the defense group?
That's a great question. I'm really glad you asked that. I would pick an ETF. I would not try to get into individual stock selection unless you're a professional, because I think your odds of doing better than just a simple ETF would do are probably pretty low. It's just really hard to pick the right stock at the right time for the right price. But you look at these stocks today, and they're off quite a bit less than the market indices, which shows they are defensive, and they're probably lower beta stocks than the market, which means they don't bounce around quite as much. And the market's getting drilled so badly today. If I had some dry powder, I would probably buy a little bit today. Maybe if you want to put on, let's pick a random number. You want to put on $1 exposure, maybe put on 15 to 25 cents today, and leave yourself quite a bit of extra quarters to throw at that dollar target amount of exposure you want to get in the market in case the market falls quite a bit further, which seems pretty likely right now with all the downside momentum. We may get a kind of reflux bounce after this today because it's been so intense, but I don't think we're done with the volatility or going down yet.
You mentioned small caps, which are down about 20% off the highs, looking at value as well. Bringing into our conversation, Cai von Rumohr is also with us of Cowen to talk about aerospace and defense. You're the analyst there, senior analyst of this group, right. Cai von Rumohr, who you've been around for a long, long time. I'm glad you're able to join us here on the show. Yeah, no, I remember you from a long time ago talking about this group and really doing your research as obviously we have big names for this week, right? Boeing and some of the others. But some of the names that you picked here were not the names that we follow so closely. You mentioned names like KBR, which is engineering, BAH, which is Booz Allen Hamilton, Solutions for Missions. Tell me about some of the names that you seem to like in the group that may be off the beaten path. Or, I mean, if you have names that we know well, Cai, please go for those too.
Well, we did a report last October, sort of basically saying we thought that Lockheed and Northrop, which have been underperformers, probably were near a bottom. And our thinking was that, basically the threat from China has basically become much greater. This is even before Ukraine. When you looked at the budget, Biden's budget request was down 1%, but pretty clear that Congress wants to put it up 4% or so. And that's basically Democrats plus Republicans. So it looked like there really was support from both sides of the aisle, for stronger defense. And also to the point your previous guy made, we've been nervous. I'm a little nervous about the market, and so if rates go up, not good for commercial companies. And defense, I think, should look better. Among the bigs, the one I like is GD, but that's basically as a business jet play. Of the pure defense, I'd probably pick Northrop because I think they have the cleanest growth story and sort of off the beaten track. Yeah, my partner follows KBH, but I do Booz Allen, Leidos. And I think defense services are an interesting area because they should play to the same theme. They have some civil business. but they don't face the risk of the R&D tax credit amortization that you have with the big guys. They don't have pension plans. They have 401k plans. And they've basically had some weird things happening as a result of COVID, which are that the revenue growth has been looking down a little bit because of less travel and less travel. So I think as things come back, you'll see that the revenues will come back better.